Hi everyone, welcome back to Saheb Academy. Today in this 9th video of internal reconstruction chapter, we are going to solve our 7th problem, which is illustration 7 from the ICAI study material. And the main thing about this question is that it's a simple question actually, but here the question is silent regarding the treatment of intangible assets. If you can see over here, patents and copyrights are there in this question of 70,000 rupees. But in the adjustments, nothing has been said regarding this. Okay, the question is completely silent. So you have to know how you have to treat the intangible assets, and that is what we're going to focus on in this video. Rest everything is very simple. Okay, so let's begin. Let's read the question now. See here, illustration 7. Following is the balance sheet of ABC Limited as at 31st March 2021. So here we have been given the balance sheet and notes to accounts. You can see over here. Right, so first see share capital 26 lakhs. We have equity shares and preference shares. Equity shares of rupees 10 each. How many? 2 lakh equity shares. So 2 lakh into 10, that's 20 lakhs. And then we have preference shares of 100 each. 6,000 number of preference shares, 8%. So that's 6 lakh. Yes, yeah. And then in reserves and surplus we have 4 lakh 5,000. As you can see, it's in negative. So that's debit balance of profit and loss. Right, we have to write that off in the big entry by utilizing the capital reduction balance, isn't it? Yes. Next we have long-term borrowing. See here, note number 3, 9%. Debentures we have of 12 lakhs. Fine. So then we have current liabilities, trade payables 5 lakh 92,000. Okay, and then we also have a bank overdraft, as you can see over here, 1 lakh 50,000. Fine. So total equity and liabilities are 41 lakh 37,000. And then moving on to the assets, see non-current assets, PPE 11 lakh 50,000. So if you see note number 4 over here, plant and machinery 9 lakh, furniture and fixtures 2 lakh 50,000. Okay, total 11 lakh 50. And then see, we are coming to intangible assets, note number 5. You all know patents and copyrights are there of 70,000 rupees. Fine. And then non-current investment 68,000. Okay, so if you see in the note number 6 here, in the bracket they have given you the market value of 55,000. So immediately you have to understand there must be an adjustment of this investment. Maybe mostly they will be revaluing the investment to the market value. Okay, fine. So that's 68,000 and the market value is 55. Okay, and then see current assets, inventory 14 lakhs. Fine. Trade receivables 14 lakh 39,000. Right, and then cash and cash equivalents 10,000. Okay, so in total 41 lakh 37,000. So this is the balance sheet you have. Now let's just see the scheme of reconstruction over here. See, the following scheme of reconstruction was finalized. Okay, so only 5 adjustments are there, really simple adjustments, nothing is there. Pass necessary journal entries in the books of the company, prepare capital reduction account and balance sheet of the company after internal reconstruction. So you see here there is a requirement that you have to prepare capital reduction account. So that also will do. That's very simple, it's not difficult. Okay, and we have to pass the journal entries and balance sheet after the internal reconstruction. So let's do that. Okay, let's first go to the journal entries. Now see, here we have the solution. In the books of ABC Limited, we have to pass the journal entries by going through the scheme of reconstruction. So let's start with the first one. See here, preference shareholders would give up 30% of their capital in exchange for allotment of 11% debentures to them. Okay, fine. So now, did you understand anything by this sentence? See, let me tell you, this sentence has not been framed properly by the ICAI. Okay, because it's very confusing over here. Okay, most of the students make the mistake of thinking that only 30% of the capital is being cancelled. Okay, and they pass the wrong entry for this. So understand properly what I'm saying right now. Okay, see, there are preference shareholders, yes, who have preference shares. How many? 6,000 preference shares. Yes, the total capital is 6 lakh. And in the question they are saying preference shareholders, forget about that 30%, preference shareholders, to them debentures are being allotted. Yeah, preference shareholders are there, they have preference shares, so debentures are given to them. Okay, so you have to understand entire preference share capital is being cancelled. Entire 100% preference share capital is being cancelled. This entire 6 lakh is being cancelled, and then in return what preference shareholders are getting in exchange? What preference shareholders are getting? Debentures, 11% debentures. Okay, have they told you any value? Have they told you how many number of debentures, what face value? No, nothing has been said. Just they are saying 11% debentures. Okay, fine. So they are also saying one more thing over here. preference shareholders would give up 30% of their capital. What does that mean? They would give up 30% of their capital. You have to understand here ICAI is trying to tell you that preference shareholders are completely sacrificing their 30% of their capital, which means in return of this 30% they are not getting anything. Understand? Okay, let me just explain you with the help of a calculator. See, in the calculator, see here, 6 lakh preference share capital is there. Yeah, the question is trying to tell you 30% has been given up, which means see here 1,80,000. Yeah, that's 1,80,000. So for this 1,80,000, preference shareholders will not get debentures. They will not get debentures. For the remaining 70%, they will get debentures. That's what they are trying to tell you. 30% has been given up. See here, preference shareholders would give up 30% of their capital, which means 1,80,000 will go to capital reduction account because it's a gain. 6 lakh preference share capital has been cancelled. You have to debit that. And then you have to credit only 70%. You have to credit only 70% of 11% debentures. Yeah, only 70% value debentures you are giving. Okay, 6 lakh into 70, only 4,20,000 worth of debentures you are giving in return. So what's your gain? What's the gain of the company? The gain is that 30% which they have given up, which they have sacrificed. Is that clear? That's the meaning of this sentence. So how will you pass the journal entry? Really simple. Understand. 8% preference share capital account debit. Okay, you will cancel entire 100% capital. Okay, fine. And then you will credit what? 11% debenture, because debentures are being issued to them. Yes, so they have not given any value or anything. They have just said 30% is sacrifice. Yeah, for 30% they are not getting anything. Those preference shareholders, we are not giving them anything for that 30%. So that 30% will go to capital reduction because that's our gain from the company's point of view. Okay, for the remaining portion, for the remaining 70%, they are getting debentures, which is 4,20,000. I showed you the calculation, right? 6 lakh into 70%, that's 4,20,000. Is that clear? Is that clear? Simple, right? Yes. So this is the first adjustment over. Now moving on to the second adjustment. See here, debenture holders having charge on plant and machinery would accept plant and machinery in full settlement of their dues. So let's see, in balance sheet, which debentures are there? These are new debentures. They are not talking about 11% debenture. They are talking about the old debentures. See here, 9% debentures are there of 12 lakhs. So they are saying these debenture holders having charge on plant and machinery would accept plant and machinery only in full settlement. So let's see what's the value of plant and machinery. Value of plant and machinery is 9 lakh. Yeah. So 12 lakh is the value of debentures. Yeah. And debenture holders are ready to take plant and machinery in full settlement. Yeah, minus 9 lakh. Yeah, so 3 lakh will be our gain. Yeah, 12 lakh liability is being settled at 9 lakh. They have taken plant and machinery, our plant and machinery, and liability is finished. Plant and machinery is also gone. Debentures are also gone. Yeah, I mean the liability is also gone. So our gain is 3 lakh, which will go to capital reduction. Simple entry. Yes. So see the journal entry, 9% debentures account debit. You will cancel the entire debentures liability. Yeah, our liability. And then because it's full settlement now, they have said in the question it's full settlement. Yes, so you will debit the 12 lakh debentures and then you will credit the plant and machinery because asset is no more there. Yeah, they have taken away the plant and machinery. So we will reduce that from our books. How do you reduce the asset? By crediting it. Yes, and then the balancing figure will be capital reduction 3 lakh. Is it clear? Is it clear? Yes, simple. Then see the next adjustment. Third one, inventory equal to 5 lakh in book value will be taken over by trade payables in full settlement of their dues. So let's see what's happening over here. Trade payables are of how much in this question? Trade payables are of 5,92,000. Okay, 5,92,000. This is our liability. Now trade payables are taking over inventory of 5 lakh in full settlement. So easily you can understand we have to pay 5,92,000 and they are accepting 5 lakh worth of inventory. So we are in gain of how much? 92,000, isn't it? Yes, simple. 5,92,000 was our liability to trade payables. They accepted 5 lakh inventory, yeah, less than our liability. So that's equal to 92,000 gain, which will go to capital reduction. Fine. So see the journal entry. trade payables account debit, you will cancel the entire trade payables because it's full settlement, yeah, 5,92,000, and then you will credit the inventory by how much? By 5 lakh. Actually in the balance sheet inventory is more, okay, inventory is 14 lakh, okay, but the question has specified inventory equal to 5 lakh in book value they have taken over. Is it clear? Okay, to inventory 5 lakhs. So what's the difference? That will go to capital reduction. Really simple and straightforward. Okay, moving on then to the next adjustment. See here, investment value to be reduced to market price. Now see, this is the reduction in the investment value. Okay, so this we will do at last, okay, in the big entry. So just circle it and leave it. Okay, right. And then see what else they are saying. Next adjustment, yeah, it's the last adjustment. The company would issue 11% debentures for 3 lakh. Okay, that's really simple. What's the entry for debenture issue? Fresh issue of debentures, bank account debit, because we are getting the money and we are issuing the debenture, new debentures we have to create of 3 lakh. So 211% debentures, isn't it? Simple. And then they are saying, and augment its working capital requirement after settlement of bank overdraft. Now what does this mean? This second sentence, and augment. What do you mean by augment? Augment is nothing but just enhance, okay, just increase. Yeah, that's what they are saying. Just enhance your cash position. Yeah, they are giving you the reason actually. See, why are we issuing debentures? To get cash, okay, and because of getting cash, what will happen? Our working capital management will be enhanced. Yeah, augment its working capital requirement after settlement of bank overdraft. Now in the question there is also bank overdraft, so that also we have to pay. So let's go slow, let's do things one by one. First let's just issue new debentures. Okay, see here, bank account debit. Yeah, we have received money. How much? They said 3 lakh worth of debentures, right? So yeah, bank account debit 3 lakh. Okay, 211% debentures 3 lakh. Simple, easy. So you are done with the first part of the sentence. Yeah, the company would issue 11% debentures for 3 lakh, and then they are saying and augment its working capital requirement after settlement of bank overdraft. So you don't have to do anything, just fresh issue of debentures only have augmented the working capital requirement, and then you just have to settle the bank overdraft. Okay, so how do you settle the bank overdraft? Really simple. Bank overdraft is like a short-term loan. Yeah, so you know it's a liability appearing in the balance sheet. You can see over here. Yeah, short-term borrowing, bank overdraft 1,50,000. So it's a liability. What will you do? You will pay it off, right? Actually, what do? Actually, we just net it off, right? In the previous question also there was bank overdraft. We have not passed a separate entry for that. We have directly treated in the balance sheet. Okay, all right. So now see here, bank overdraft account debit, it's a liability. If you want to reduce the liability, if you want to pay off the liability, then what will happen? You will have to debit it to decrease the liability. Bank overdraft account debit 1,50,000, and then payment is being done to bank account. Simple, easy. And then what? All the adjustments are over, right? Everything is over. Yes. Now after this fresh issue, you still have 1,50,000 cash, so that would enhance your working capital requirement. Fine. Okay, so that's the meaning. And then they have also asked you to prepare the capital reduction account. So let's prepare the capital reduction account. See here, it's really simple. Let me just show you. We have big entry remaining, but before that I want to show you capital reduction account. See, capital reduction account has credit balance. Yeah, we take all the gains over here, and then whatever losses are there will come over here. That's how we are utilizing the capital reduction. And then if there is any balance left, then that will go to capital reserve. Okay, so see here, for capital reduction account, credit means plus, debit means minus. Okay, so here see, capital reduction account is getting credited, yeah, because of preference share capital. So see, capital reduction account is getting credited because of preference share capital 1,80,000. Yeah, you will take this amount 1,80,000. Then see the next entry, capital reduction account is getting credited because of debentures. Which amount? This 3 lakh. Capital reduction account is getting credited, yeah, write the amount 3 lakh because of 9% debentures. Is it clear? Yeah. And then see next, yeah, here also in trade payables, capital reduction account is getting credited by 92,000 because of trade payables. Capital reduction account is getting credited by 92,000 because of trade payables. Is it clear? This is how you have to do it. Fine. And then the sum total of this will be the balance that exists in capital reduction. How much? 5,72,000. So if you're passing the entry, then see here, capital reduction account debit 5,72,000. Yeah, from where did we get this amount? By doing everything. Okay, 5,72,000. Is that clear? Is that clear? Yeah. And sometime let's just say there is loss over here, then that loss will also come over here. Fine. So let's see now. See here, capital reduction is being utilized now. Okay, see, capital reduction 5,72 we have, now we are utilizing it. Okay, so first is regarding the investments. See here, investment value to be reduced to market price. So let's see in the balance sheet how much are the investments. Investment value is 68. So from 68 book value, it's coming to 55,000. So 68 minus 55, that's equal to 13,000 reduction. Okay, 13,000 reduction, that will come over here, 13,000. Okay, yes. And then profit and loss balance is how much? Debit balance 4,05,000. So that also you have to write off to profit and loss 4,05,000. Okay, and then there is balance left, which will go to capital reserve. Okay, 5,72,000 minus 13,000 minus 4,05,000, that's equal to 1,54,000, which is the balance left at last, which will has to go to capital reserve as usual. Is that clear? Yes. So in capital reduction, you know, all these things will be presented over there. Yeah, where is capital reduction account? Yeah, see here, these were the gains and then these were the losses written off. You can see investment, yeah, profit and loss, capital reserve, everything is there over here. Okay, 13,000, 4,05,000, 1,54,000. Yeah, all here what's happening, capital reduction account is getting debited by 5,72,000. Capital reduction account is getting debited because of what? Because of investment 13,000, because of profit and loss 4,05,000, because of capital reserve for 1,54,000. Is that clear? This is how you have to do it. Okay, capital reduction account, really simple and straightforward. All right, easy, right? Yes. And then coming to the main point of this question, that is regarding the intangible assets. Yeah, how do we treat intangible assets if the question is silent? If the question is silent, like here in this question, it is completely silent. Yeah, nothing has been said regarding intangible asset, regarding patents and copyrights. Yeah, so what are we supposed to do? Okay, so before this, understand if there are any fictitious assets, right? Let's just like this, you know, profit and loss debit balance, preliminary expenses, and then discount on issue of debentures, and then, you know, what else? Underwriting commission. All these things now, fictitious asset, you know, all these losses, accumulated losses. For these, you always have to write off. Yeah, these you always have to write off. Whether the question says or not, it doesn't matter. You always need to write it off. But when it comes to intangible asset, you have the discretion. Yeah, so mostly 99% of the time what will happen is the question will tell you what to do about the intangible assets, goodwill, patents and copyrights, yeah, trademarks, copyrights, yeah, all these things. The question will tell you, right, what you have to do. But if the question is silent, which happens very rarely, like only this question is there in the ICAI study material where the question is silent regarding the intangible assets. So in this case, you have the discretion. You can do whatever you like. Okay, but whatever you do, you have to write a note down below that certain assumption I have made, and you know, what do you say, you know, you have to write it off or you are not writing it off. Okay, you have to just leave it like that. Fine. But now what ICAI has done, let me just tell you. Okay, see here, in this question ICAI has just, you know, left it like that. Nothing has been done. It has not been written off. So now see here, in this question, nothing has been said regarding patents and copyrights of 70,000. So we will assume it is not written off. Clear? But if there would have been goodwill given over there, then we would have written it off, because a loss-making company shouldn't have goodwill. Yeah, a consistent loss-making company which is in a very bad condition, which is going for internal reconstruction, then after the internal reconstruction, how can it have a goodwill, right? So that's why it's preferred to write off the goodwill. But now then also you have to understand, it's up to you. Okay, you will not lose any marks if you write a proper note down below that I have assumed so and so and I'm not writing it off, then you will not lose marks. Is that clear? And you know, let's just say for example, what happened was in capital reduction, you didn't have balance left. Yeah, you didn't have any balance left. Let's say for example, you had 1 lakh over here and everything has been written off, and that capital reduction balance also has become 0 or it has become negative. Then in that situation, what we will do? In that situation, you will not write off patents and copyrights or goodwill also. Okay, you will abstain from doing that. Okay, this is how you have to do it. Fine. So it's up to you. For intangible asset, it's up to you. But usually what do we do? Usually if the question is silent, we don't write off patents and copyright, but we do write off goodwill. Is it clear? Yeah, patents, copyright, licenses, and then trademarks, all these things we don't write them off. Okay, but goodwill we write them off. Is that clear? Yes. So this was the thing about the silent question regarding intangible assets. And then after the general entries, now we have to see the balance sheet. So let's just see the balance sheet. Now see here, we have the balance sheet after the reconstruction. Balance sheet of ABC Limited, and reduce you have to write in the bracket as at 31st March 2021. So let's see. Share capital note number 1, 20 lakhs. How is it 20 lakhs? See what happened. See the previous balance sheet. In the share capital there were 26 lakhs amount, right? So that was preference share capital also, but preference share capital is completely cancelled, isn't it? In the first entry, in the first adjustment, it was cancelled completely. So there will not be any more preference share capital, so it's gone. So if you see in the new balance sheet, only equity share capital is there, which is exactly duplicate from the previous balance sheet, because nothing has been done to equity share capital. Is that clear? Yes. Next, in reserves and surplus, there was previously only profit and loss balance of 4,05,000, so that we have written it off. So what do we have now? We only have capital reserve. Yeah, the balance which was left at last in capital reduction, that has been transferred to capital reserve of 1,54,000. So that will come over here, 1,54,000. Is it clear? Yes. And then non-current liabilities, we have long-term borrowings. Yeah, we have debentures. So what happened to debentures? Let's see the entries. First, see here, in the previous balance sheet we had debentures of 9%. Yeah, 9% debentures, isn't it? 12 lakhs. But this was cancelled, isn't it? This was cancelled because they took our plant and machinery and they are no more. 9% debentures are no more. So we issued new debentures of 11%. See here, 11% debentures to preference shareholders, isn't it, in the first entry? So that was 4,20,000. So that will come over there, okay, in the new balance sheet. And then again we have issued debentures over here of 3 lakh. So 4,20,000 plus 3 lakh. Okay, 4,20,000 plus 3 lakhs. So that's equal to 7,20,000. So new debentures would be 7,20,000, the total value. Okay, see here, 11% debentures, 7,20,000, 4,20,000 plus 3 lakh. Is that clear? Simple. And then yeah, then the liabilities are over. So in total, how much is the liability? 20 lakhs plus 1,54,000 plus 7,20,000, that's equal to 28,74,000. Clear? So that's the total of equity and liabilities. And then moving on to the non-current assets, we have property, plant and equipment, note number 4, 2,50,000. How it is 2,50,000? See, understand, previously in the balance sheet, in property, plant and equipment, we had plant and machinery of 9 lakh and furniture and fixtures, but 9 lakh plant and machinery has been taken over by debenture holders, isn't it? Debenture holders have taken over that. Yeah, plant and machinery is gone, it's no more there in our balance sheet, so we have to remove that from there. Okay, see here, plant and machinery 9 lakh less adjustment on scheme of reconstruction, yeah, it has been subtracted, so 0. Only furniture and fixtures are there of 2,50,000. Clear? Easy. And then we have intangible asset, note number 5, 70,000. Yeah, the same thing only, whatever that was there in the previous balance sheet, the same exact duplicate. Okay, 70,000. Clear? Easy. Next we have non-current investment. Non-current investment have been revalued to its market value, 55,000. So that you will take. Okay. See here, 68,000 minus 13,000 reduction. We know now in the journal entry you can see investment have been written down by 13,000. So it's to 55,000. The value has been brought to 55,000. Clear. And then we have, see here, inventories. What happened to inventories? 5 lakh worth of inventories was taken over by whom? Inventories was taken over by creditors, isn't it? By the trade payables. So inventories 14 lakh. Yeah, in the old balance sheet the total inventories were 14 lakhs. So 14 lakhs minus 5 lakh. They told us now 5 lakh worth of inventory was taken over. Inventory was credited by 5 lakh. So 5 lakh you have to subtract. So that's equal to 9 lakh. And then trade receivables as it is, there is no change. 14 lakh 39,000. In the old balance sheet also 14 lakh 39. In the new also 14 lakh 39. And then in cash and cash equivalents, what happened? You have to see all the journal entries properly. See here. First you had 10,000. Cash and cash equivalent 10,000 you had in the old balance sheet. And then see the journal entries. What has happened? If you see in the journal entries, see here, Is there any bank cash? Yeah, see here, bank is there. How much? 3 lakh. So 10,000 was already there plus 3 lakh. Yeah, so that was your 3 lakh 10,000. And then we have made a payment of bank overdraft. Yeah, so 1 lakh 50 minus 1 lakh 50, so that's equal to 1 lakh 60. So 1 lakh 60 balance should be there in cash and cash equivalents. Yeah, in cash at bank. Yeah, 1 lakh 60,000. See here, opening balance 10,000 plus the 3 lakh which we received from the fresh issue of debentures, and then the bank overdraft payment. So at last we have 1 lakh 60,000. Is it clear? So this is the thing. Okay, this is the balance sheet. Simple and straightforward. There's nothing over here. Everything has been eliminated in this question. Yeah. Okay. So you have understood now. You have understood how to prepare the capital reduction account and then the assumption what you have to make. Yeah. Everything you understood. Fine. So that's all for this video. See you in the next video. Bye.